So today's video is about Fibonacci, price action, and the Bybit exchange in terms of how to use it with and without leverage, how to make your risk management perfect before you jump in a trade, full trading plan, full area of how to trade officially in a very, very high probability fashion. The camera will be off, so I hope you enjoy it. And yeah, give it a share. So welcome to the channel. If you are new, subscribe, bell button please, like and comment. Obviously share this out. I'm going to introduce you to some stuff in my brain that I kind of use mainly for the higher time frames. I'll go over it in more detail so you can kind of get a picture of how I analyze markets and how I use psychological and previous price action. So I keep my charts nice and simple, complete. This video here, I'm going to go over how Bybit works with and without leverage, by the way. You don't have to use leverage. Also, link below, jump in. It is the most simple platform you'll use. I see a lot of cryptocurrency traders use MT5. I don't quite understand why you do that. Using brokers, use an exchange. But if you want to use like long and short, use Bybit. By far it's better. And I'm going to explain why and how it is by far superior than any other platform out there, in my honest opinion, due to risk management, how safe it is, price action, clean, mutual insurance, all kinds of stuff. But we'll talk first about how I trade officially in terms of like realistically some of the nods you need. Now obviously trading is all about your own edge, your own risk management, your own style, your own lifestyle, all kinds of stuff. It's not just a combination of what I do, it's a combination of yourself. If you're a greedy person, technically you'll be quite greedy in the chart. You'll probably over leverage and kill yourself. If you're quite conservative, you'll be quite, quite good with risk management and stuff. That's kind of where I am with it. But in terms of this chart setup, what have we got here? Now you're probably thinking, well, what have we got? There's ultimately a lot of fabrications within this chart alone. Okay, so if you zoom in enough, I've already put a Fibonacci on here to kind of show stuff. But if we're looking from this swing level, we always know that this is, technically you can argue this is an uptrend, but in terms of the intra-week and intra-day sort of levels in and around the current price action, we're actually starting to form a downtrend, which is kind of giving us a bit of probability factor that we may actually be coming down in the short term, maybe retest this level here. And this level has significance, it has confluence, and we're going to explain it in more detail. But let's go over it in terms of fine-grained detail. The first thing I want to explain is what are these green, amber, red lights, right? You're probably thinking, hoo-hoo, traffic lights. They are retracement levels of the overall swing. This is the overall swing. Going from, obviously from there, high, COVID crash, where we are currently right now, just to explain it in more detail. And that is governed by the Fibonacci, bear with me. So zooming back in again, hello. This is vitally important you understand this. Now, I get a lot of stick going, oh, we're not going to do that, but we might. It's a probability factor. This is how trading works, how markets work. You got buyers, sellers, probability. Who's going to win? Who's not going to win? We'll see. So let's talk about it. So if we go wick to wick on this level here, boom, that is it. Cheat. Simple, innit? So 5,600 or 5,700. We've got 618 at 7,100, and we've got literally 9k levels for the 0382, which I feel we're going anyways at some point soon. So why does it matter? Because we've got a thing, corrections, markets coming down. Overall, longer scale is that, okay, the entire swing up to swing low to swing high, sorry. If we zoom out of this, we've actually got price targets for potentially 15k, 17, and way beyond that into about 26k, I think. Yeah, there you go. That little green line already prepared, boys and girls. That could happen. Why are you thinking, well, how? Because we could go, boom, correct, still be forming a trend, and then it forms a high, and then could go up to those potential targets, breaking out of this previous structure. So let's go over this in detail in terms of current live situations. Now, buy low, sell high. Simple, right? Really, really simple. But ultimately, you want to try and get in on any sort of move. Now, how I trade is this. I am a discount trader. What does that mean? I wait for corrections, I wait for pullbacks, I wait for retests. I don't go in the breakout, I wait for something to turn around. The obvious. Now, you're probably thinking, how? Well, if we just zoom in alone on the start of this structure, look for the obvious. Even looking at the wicks, for example. The wicks is a great place to start, by the way, just to give you an insight. An insight into the madness is look at what the wicks are telling you. I'm not really into the candle naming and go, oh, it's a hammer, oh, it's a doji, oh, it's a whatever, this, that, and the other. You know, it's not a skateboarding ramp, it's not a skateboarding trick. It's, for me, I focus on what the wicks are telling me. If there's a massive shoot up and it comes back down, that's telling me that there's been sellers and it's absorbed the buy-in pressure and it's starting to potentially retrace. When you get candle closures and you start seeing, oh, hello, it's looking a bit obvious, that is where you tend to look at where the price action could be going. Now, if you zoom in enough, you can see it all over the chart. Look at the chart and just, if you want, pause the video and just look at what the trend is doing. Trending market is where I trade. Simple as that. Stuff when it's like this and it's ranging, I don't tend to touch. I look for trending markets. I look for the obvious bang and then retracement because it makes much more difference, and I'll explain why. So when you look at the COVID-19 crash here and you're looking at how it turned around, we've got two factors to consider. One, the RSI. Okay, the RSI is in a very, very low range, starting to turn upwards. We've also got the fact of this level here, buying pressure, liquidity has been found, basically an area of demand. Simple as that. When we then take it back and look at where it actually corrected, now ignore the red bit, that's obviously from the future, but it has significance, and I'm going to explain why the significance is there, especially when you start zooming out. When you zoom out and you look at current price levels, we've got this here as a potential resistance from the past and also support. Look again, another ledge. Looking all the way across, all the way across, all the way. This is a key level. It's been identified. That is one thing to do. But what we need to know is when you plan these moves, when you plan any sort of trade, you've got to look at current price levels, structure. If you look left, you know that 2 years ago, 3 years ago, whatever, that ledge holds. Well, you've got a wick there and it's coming back down. Remember, this is a daily time frame. 1 day, 2 day, 3 day. You've got 3 days to sit and see. You will be looking at that wick going, oh, that's cool, yeah. But the beautiful thing about this, we had 2 bites of the cherry. So this is how you get in on a long. And this is me just explaining the methodology of why I'm a discount trader. Too many people chase the moves. They chase, and often people tell me I'm very pessimistic. I always wait for the correction because ultimately, especially with altcoins and stuff like that, price discovery missions, they don't always go to plan. Hindsight's a beautiful thing. But if you go wick to wick into that level, all the way across, and then go across, you know that there's a potential level there for interest. Why? You've got the 0382 there, which is a potential area where you can start laddering in your orders. Now, you're probably thinking, well, actually it goes a lot lower. This is where the probability factor comes in. You are only looking at probability that things are going to turn around and go to a place of interest. The 0382 is quite reactive in crypto. So is the 618 and so is the 50%. The 50% is currently not on my chart at the moment because it's not a Fibonacci number, but roughly you know where it is. It's in between that area. But we know anyways with this price level, we've got these wicks here. That wick, that wick. That is also a key area. Why? It's current price levels. They've wicked down. It's rejected. But when, as I say, you zoom out and you start looking at this region, we've got support and resistance all over the place. It isn't a bad place to start looking for a potential order. Now, what do you do on the next section? Well, because you've got that support level and you know it's there, you've got a discount. Regardless of what happens in the future, we carry on going up. You are looking for the best probable chance to try and get into it as an investor, as a trader, whatever it may be, right? As an investor, you can use this method by simply putting a Fibonacci tool on as an uptrend, low to high of that move to try and get in. Just look for a correction. If you're thinking, wow, that's unbelievable, it's dumped, I want to get in this. People obviously miss bottoms or they keep buying. Look for a trend. The trend is formed here. Why? Because it is formed a new, simple. It's formed a new high. Higher low. Hello. And what's it formed next? High, high. High, low. High, high. High, low. Boom. The trend. Trending markets are very, very easy to get into. It's where I get most of my orders in. So that's that. Orders in. Let's just see if this is a 50%. Where is it? There it is. 50%. On the nose. On the nose, 50%. So it's entirely up to you if you want to use it or not. Personally, I don't, because I can kind of see it with my eyeballs anyways in between. I like to not have too much on my chart. So that's how you get into a trade. How do you get out? Well, you can see my targeting points there. I have got extensions on here. This is TP1, which could technically be the start of the move, which is one way you can get out. You got the 0309, which is no reference at all. It's just half that 618. And then obviously we've got the 618. So that's basically 50% from this point, halfway. And it usually works very, very well with confluence. So it's quite nice. And then obviously there. You've also got the -1618, which is like the big extension, which is the default extension on the first move of a full-on Fibonacci extension. So there you're targeting. So that is simply how I would get into a move and ride it to a certain point, the low to the high as much as I can. Patience. I mentioned before, range in markets, trending markets, why they're crap. Ultimately, this is not ideal. What we're looking for with this to get in and to be comfortable with it is obviously it's sideways. The EMAs tell us it's sideways because they've crossed, they've crossed together and they're going along in and out, in and out, in and out. When you got a cross up and a big impulse and then it forms obviously a trend, higher low, lower high, low low, whatever, simple. These don't. You can see here, look at this. High, high low. Oh, it's failed. Danger zone. Then you go like this. Oh, danger zone. What it should have done was formed a low below that point and then another low and then that. Didn't. Went sideways. It stayed in between into weekly channel and it was ranging. Range traders love it. Personally, hate it. So for me, that whole region, no trade zone on Bitcoin. That's how I identify it. The first identification is, has it formed a trend? No. Leave it alone. Until it breaks out. So if it broke out beyond this, yeah, I could be interested because the pullback will pull into that zone and it will go for a retest. TP1, beyond. Didn't happen though, did it? So, current price levels, let's look at it. Talk about shorting. And, shorting on Bitcoin is always risky, but it's hugely profitable. What we're looking at current price levels is, again, the shorter version of starting into a move. As you can see here, we know we got in on this move, boom, off we go. The same thing could be happening right here. Why? When you look at this as price action, price levels, we've got a potential top here. But we're looking for the discount, aren't we? We're looking for the correction. We're looking for that oomph. Oh, hello. We're into a zone. Happy days. Zones are good. Now, what have we got here? If we zoom in enough, downtrend, support, correction, discount. Boom. But let's just do this in fine-grained detail. Let's look at that first move there. People probably think, well, how does this work? Why is the method in this magic? First, we've got an RSI divergence. This is going down, that is going up. Confluence number one, simple. Confluence number two of this first move is the obvious. Now, this is where I mentioned recently I saw that 11,500. I jumped back in at just below this region here, 11,300. So I got a nice little discount just as a spot trade, nothing exciting. But if you go from this wick down to this level here and then across, we have got it as perfect as it can be. Like, as a move, that is perfect. Why? Confluence is telling us one thing. One, we have got, in this previous level, a lot of support and resistance. If I zoom out as well, see how, there we go. So, in and around this region, we've got price structure. We've got basically resistance all the way across, and we had a fake out, yeah? When you put that on there all the way across, and you're looking, we've got body, 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 basically. If you keep going, you're probably going to find even more. There we go. Current price levels. Let me just make sure I got that right. Where is current price levels? Or higher even. There we go. All the way across. So it goes all the way across, both support and resistance. It's hard to see on the screen. I do apologize. But there's structure there. So the first thing that you'd do anyways, before you actually put the fib on, you'd look at current price level. So if you're thinking, right, we've died, okay, cool. But then you'd look at this level here, you'd instantly go horizontal ray, and you'd basically go, look at these body closure, look at these wicks, wick, body closure, whatever, cool. You'd put that on your chart anyways, because you'd be like thinking, well, we got 1, 2, 3, 4, 5, 6, 7, breakout, 8, 9, 10 taps at that level, right? But you've obviously got this lower level here, so you've got like a range sort of area. It's quite a big range though, to be fair. It's a good nearly $1,000, but that is resistance. But why is it significant for you to kind of like know that anyways? When you see this impulse go down, you're going to think to yourself, well, I want a discount. I want to get, if this is going to form a trend, as I say, high probability, you've got to try and think to yourself, right, where's the price going to potentially go? Resistance is a good place to start, and that's what you do. And then you've obviously got that price structure on. So when you have that in there, all you're doing, a very, very simple Fibonacci from this top level down to this bottom and then across. All the Fibonacci is telling us, and it's giving us confluence. Simple as that. It's also great for risk management, for laddering in orders, because you're waiting. This is the time. You're waiting from this point here. You know that this hit a bottom. The next candle's higher. Cool. You know, if it doesn't make it, it doesn't make it. And it may reject, you then start again. You know that that's interested. If it goes below this line, which is a previous level which you've already identified, you just go from this level, if that makes sense. So we know that's starting to go up. So, oh, okay, it's going up. Right, let's see. You start laddering in your orders, all your alerts, personally, alerts, orders. But this is a high probability sort of setup in terms of there's risk because you're going to be placing orders potentially in areas and you're hoping it turns around, right? I prefer this. As daft as it sounds, I prefer this. It feels to me like it's automated because I've done my technical analysis, I've built my plan, and we're going to go over into Bybit in a minute in terms of why this trading plan in your head makes things really, really straightforward. Now, in terms of all of this, in terms of how it all works, ultimately, you got to figure out how much you're going to lose, where's your stop loss going to be, and make an agreement with that. Simple as that. So you should know this anyways off by heart before you even put a trade on. So that's your trade setup, simple as that. You are thinking, right, bosh, we're going to go into this zone, retest resistance. If it rejects it, short in anyways. You've already put it in and around this region. And you're thinking, well, the probability is it rejects. Numerous number of rejections, a fake out, potential. Now, let me just go back a step a little bit. People probably thinking, well, what about if it just flies through it? Well, you got a stop loss. As I said, make an agreement that you are willing to risk X amount of your account, which we'll go on to in more detail in a second in terms of Bybit, which is definitely the best place to do this sort of trading strategy. For me, personally, it's the best possible price you can get, like at resistance. Too many people go short here and they're like, it's going to go. Oh, they get underwater completely and then they close the trade out before it hits resistance and then it melts, right? So what the probability is now in terms of this overall structure of this next phase where we're dumped, we went above. Now this black line is a weekly level, but what are we doing here? We have got this impulse going down and we've got that body being the closing point. We are at this resistance level. We are very, very close to acting upon this. In my opinion, we could actually go a little bit higher. So you could probably ladder in a few orders upwards into this region, into this band area. Because if you look left, as I say, current price level, just keep going. There we go. In and around this region, we've got resistance in terms of, well, support, sorry. And then you got resistance in the past as well. Keep going. You got resistance, you got a fake out, you got support level. All this region, it matters, right? There's a whole region here. Now, that's where the confluence lies. Simple as that, just a previous repeat. But we're obviously trying to get a correction here. We're trying to get a discount, but we're also formatting a trend. High, lower high, lower low, lower high, potentially. What's going to happen next? Lower low? What's the probability on that? Yeah, cool. If it goes wrong, the he goes wrong. You've made an agreement with yourself knowing that actually FOMO can happen, manipulation, someone bought a lot of Bitcoin, whatever, it happens, right? But when you start looking at the factors of the trends, chances are you've got more chance of being right than wrong, which is kind of good, which is why your risk management must be tight. So how would you do this trade? Now let's talk about it. You would start laddering in orders. Personally, I'm at 2 points with this in terms of my life. Daily time frame, I would rather ignore the 0382 and just focus on the 618 and the 786 personally. Maybe just the 618 or just below it, or the 50 and the 618. It's entirely up to you how you do it. Ultimately, Bitcoin is very reactive to the 618, whereas Ethereum is more reactive to the 382. It's just one of those things. So with that in mind, you start laddering in orders. Now, one thing you need to get, pen and paper, because we're going to go into Bybit now and I'm going to explain why the system is amazing. So if you've never used Bybit, hello, here's an introduction. You don't have to use leverage on this, by the way, just to give you a pointer. If we go onto BTC USD, for example, really, really simple. I've got X amount of money there, right? Simple, not much, just a little play around account. I want to risk, let's just say 5% of my entire account on this one trade, right? People might think, well, that's crazy, but you got to think I've got a limited amount of funds in here. I'm using the daily time frame. I need a bit of wiggle room because it's quite big fluctuations. And ultimately, I'm looking at a high probable trade. What we need to do, very, very simply, and let's make this very, very obvious as well, is we need a workout of a very, very basic math sum. Basically, 645 take away 5%. It's basically £33, give or take, or $33 in this case, whatever currency you're in. So we just write down 33. We're going to put in actually on this trade alone, probably put in 2 orders, right? And this is only for demonstration purposes because we're looking at that range of potentially 618 and a bit higher because we've already seen the 382. Now, I mentioned before 382, bit ropey, but you can actually use opportunity there. What I will say with this as well, if you so wish to, have an alert there and wait for a bearish candle closure. Wait for, if you see a bearish candle and a rejection or potentially a rejection of the EMAs, whatever, you know, you can act upon that. You can maybe get a smaller trade in as you wait, or ultimately just set up the trade from there if you see price action close. But if it carries on running, just wait and wait for that same sort of trigger to appear on the 618 if you so wish to, if you're not quite comfortable, or start just looking at these and having a tighter stop loss. It's entirely up to you how you do it. But let's just say, for argument's sake, we'll do 2 orders. We'll do one daily structure level and then a little bit higher in and around just above the 618 region, in and around where these levels are closing, right? So that would be, let's just say order number 1, let's say 11,100, which is virtually about now. And let's just say the next order, we'll say, give or take 11,350, right? Simple as that. Now we need to divide that number up in terms of the 33 into 2. Obviously 33 divided by 2, we're looking at £16.50, $16.50, whatever. Let's just say 16 on each is what we are looking to lose on each trade. Now you got to remember, you need to put less on at the first bit and more on at the higher bit to dollar cost average into a position, right? Simple as that, as simple as it can be. Now it's entirely up to you how you do this, but this is how it works on here. So obviously limit order, simple. I'll go through this in more detail now. As I said before, you don't have to use leverage. You can use nothing. 1x. Again, on the short as well, 1x. Simple. Limit order, right? We'll do it without leverage to show you. 11,100. Simple as that. Well, it's actually this, in all fairness. Now, you're probably thinking, sell, short, we need this entered. This is vitally important. Before you enter anything in here, we need to enter these in. Why? Because we need to figure out roughly where the percentage lines are going to be. Now, when you start figuring out your stop loss, this is where your trading plan comes in. So what we need to do, go back to the chart, and we're going to put a stop loss when structure is completely broken. It's going to be quite wide, and you're going to see why it's very wide in a minute, because this is where you got to think. Sometimes it may go all the way up to this point and it still be valid all the way to this point. We are looking for it to take out a high. Basically, you could probably argue up to here. If you want to have it really loose, you can, but that will mean much bigger sort of equity to be left over because your account is at risk. So for argument's sake, let's just say 12,500 all the way up to the top here. It's a big swing. You can obviously refine this, you can make it lower, it's entirely up to you. But daily time frame, you want to try and make sure you don't break structure. As simple as that. You're looking, because what we're looking at here is potentially a high probability trade. So if we're doing 12,500, that is your stop loss. Once you've put that in, you can then figure out your risk management. So 10% of your entire account here. Basically, you've got that there. You would lose without leverage essentially $6.90. Okay, you're under by quite a chunk. That is about 19. If we edit that to say 12, that is giving us what it should be. That's telling you straight away what it will be. That is quite a big sort of, buffer essentially on that one order alone. Okay. When you then obviously think to yourself, well, actually, what would it look like in real terms in terms of a potential move? Well, that's the thing. The beauty of this is we've got confluence with so many different things lower. The risk reward, even with the likes of that as a Y stop loss, you could potentially get yourself a decent little risk reward, as daft as that may sound. But for me, I would probably exit position just above the 12k region. I wouldn't go all the way up to the top. That's just my personal opinion. I think even if it does reject and it stops me out, I think there's a definite opportunity for another trade anyway to get your money back essentially if it doesn't break that structure. But for me, I think high probability wise, if it goes wrong, obviously you've made your bets with it. It's that game. But for me personally, I think this level is obviously part of the structure of what you're going on. Once you're above that, yeah. So for me, we'll edit it slightly, but that's just my risk bag, what I do. So I'm going to say 12,050 for me, which will refine it a bit more. So again, you can probably refine this one. Happy days. In and around, you can figure it out how much you're risking, pretty much that on that one order. Now that is one order in. Simple, right? Going short from that area. If you then press open short, happy days. But one thing you need as well is a TP. Take profit, it's entirely up to you. Personally, I would be looking at 9.8 or at least 9,100. So if you put 9,100 in here, you can see there, you're basically at a 2-to-1 risk ratio on that one TP alone. Now, one thing as well, remember, we're going to be doing two orders, aren't we? The next order is a vital one as well. So if we just go on here, let's just say sell short, happy days, we're willing to risk that much. On a 1x leverage, by the way, there's no leverage. By the way, if you wanted to then change your leverage, all you need to do is just edit it. So if you wanted to do, say, I don't know, 10x leverage, randomly, I know, you can then do it as that. So just be careful with that. So again, if you wanted to do that, you can. Obviously, remember roughly what you were doing. Again, it's entirely up to you. Similar sort of ilk, but you can risk a bit more on this. Risk more on this one. Obviously, you can lose potentially more. Personally, I only use 3x, but that's just me. But for the demonstrations of this video, we'll just do 1x just to show you how it all kind of works, because it's just the easiest way of doing it. So this is all about giving you that basis that you have got everything in terms of absolutely everything, and you're not worried too much about it. And then when obviously your orders go live, you'll see exactly what I mean by taking profit as well. Because when I, bear with me, let me just press the short button. Happy days, right? In terms of an order, it'll go in there, all automatically done for you. When you do two orders though, it'll do two, and then obviously it'll quantify them both together. So if I do order number 2, which we're looking at a much higher level, so we're looking at 11,350 on this one. We're looking at the same TP and same stop loss. Sorry, not the same TP though. We're looking at the same TP level, stop loss. Sorry, 12.50. But on the TP on this one, we're looking for 8,450, 8,450 essentially. Much higher return. Cool, happy days. Same kettle of fish, but you can see here you can add extra to your order because you are further away. There you go. Win more, lose less, higher risk reward. Press the sell button, off we go, my friend. So you see you got two orders. When they both go together, they will crunch in together. They'll give you a dollar cost average. They'll put the quantity together. And now if you want to exit your trade, if you want to exit part of it or whatever, obviously you got your TPs, but most important thing you've got as well, you can use the close button up here. So press the close button, limit order, and you can put how much you've in. So say for example, you've got it all in and you want to take out say 25%, you can take out 25% of whatever price. Easy peasy lemon squeezy. So in terms of Bybit, it's really, really easy to use. You can also, if you so wish to, drag these up and down, automatically amends it for you. Same with your stop losses, same with everything else, and obviously you can cancel it very, very easily. Unbelievable bit of kit. And as I say, you can use this to your heart's content. You can use this very, very easily, very, very quickly, and it tells you absolutely everything before you actually go live with the trade. So I know this is a long video, but I hope you've learned something quite useful in terms of a basic methodology in terms of Fibonacci and price action, but a system in allowing you to trade Bitcoin, Ethereum, XRP, EOS, etc., but making bed with it in terms of how much you're losing. There's too many people in the leverage world that go, oh, 10x, boom. Oh, yeah, totally understanding the realm of like risk management and how to physically, in my opinion only, how much to lose before you actually start your trade. Because in my mind, it works. For me, it works because I don't want to look at my phone and go, oh, shit. You know, if you miscalculated it because you've just FOMO'd in or whatever. All about a plan. Trading plans are key. So if you enjoy this, let me know. There's more detailed stuff in the links as well below to the accredited course. This is a free content session. Thought I'd show it off, share it out. And yeah, in my opinion, for risk management, Bybit is brilliant. You don't have to use leverage. Please, if you're new to the space and you just want to trade, it's a good place to play around with. In my opinion, 1x, a couple of quid on it, learn the system, get used to it, and then build. You'll be absolutely fine.